Hi, welcome back to the channel. In case you're a listener who's here for the first time, this place is for all retail investors like us to become better at investing. I've been a retail investor myself for over a decade now, and I use this platform to share my commentary on the stock market and, more importantly, the mistakes that I've made in my investing journey so far. Investing involves your hard-earned money, and I can say that because I have skin in the game. I actively manage my stock portfolio. So before proceeding ahead, I do want to make sure that I call it out that please don't accept anything that I say at face value. Please use your discretion, use your judgment before agreeing to anything I say, and also that I'm not a SEBI registered investment advisor. I just use this platform to share my perspectives on the market in the hope that it benefits some of the listeners out there. So let's just go straight ahead. And what a day it was today, and just like the old adage of Murphy's Law, just when you're switched off from the markets, which actually was the case today, I didn't look at the markets too much today, and that's when all the action happens. And I just wanted to put out a quick update just based on today's market movement because I'm guessing a lot of retail investors may be panicking. If you're not panicking, then that means that's a good thing. But if you're panicking, I just want to post this, short video, just to sort of calm nerves down and, help us all collectively refocus our attention to the long term, right? So, my sense and my take on the market is that today's correction is much needed for the markets, as you would have known that the stock market had, just run up like anything. It was the seventh straight week when the markets were posting higher gains, and that's usually an indication that something um, is on the cards in terms of a correction. I feel this is a healthy correction, and I would not want to, and we all know why this correction has happened, in terms of a new strain of the virus coming out in the UK and so on and so forth. But irrespective of what the reason is, I think as retail investors, what we need to do is reinforce our focus on the long term. And what do I mean by that? What I mean by that is, try and avoid the chatter on, the business news channels, the internet as much as possible. It's very easy to get influenced and swayed by these things, and so just 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 switch off, and the second thing that we need to again remind ourselves is that when we buy a stock, we are buying into a business. And so we are not, or ideally, we shouldn't be bothered by too much of price fluctuations or volatility. What we need to be continuously focused on is whether the underlying business is going to perform well in the medium term and long term, and whether it's available at a good price. If those parameters are met, then what happens on a day-to-day basis in terms of price movement, at least for long-term retail investors, shouldn't be too much of a bother. This is not the first time that the market has corrected like this. So, in case you are new to, stock market investing, please just be assured that there will be many more such corrections which may happen in the future, and this is just a part of the market cycle. Not to say that I know when the markets will stop correcting. Nobody knows. Uh, you know, Suddenly you'll find on some of these business news channels people who were really optimistic, including brokerage firms, about the stock market, are suddenly now being very cautious and posting revised Nifty targets, so on and so forth. Honestly, I think if you're sitting on a good portfolio of good businesses, or if you had a wish list of companies that you always wanted to enter, but the price was too high, then I think this is a good time to just keep tracking those companies to see if they're going to correct more, and if you feel they are in a good value zone at a good price, then it might be time at that point in time, whenever the stock corrects more, to enter into it. Now, as always, again, let me emphasize, this is not a recommendation, this is just my commentary on the market. Personally, what I'm doing is, obviously, I did, in case some of you would have known this, I did make some strategic investments in the early part of December, but nothing sort of expansive. And I'm just going to do nothing. I'm just going to um, see how these individual businesses are behaving in terms of the stock price, and if I feel they've corrected more and they are in a value zone, then probably I'm going to think about entering at that time. But again, this is just my personal view on the market. Please use your own discretion. But let's just quickly go ahead and look at what happened to the market. And I just want to pull up, wait a sec. I just want to pull up a chart and see where the price action was today. And again, this is just an academic view. I mean, one day price action shouldn't make any difference, but obviously, um, everything corrected today. The Nifty corrected 3%. Um, the biggest, everything fell, and the Nifty was off 3%, the Nifty Junior was off 3.5%, uh, Nifty 500 was down 3.5%, mid cap was down almost 5%, small cap was down almost 5%, and all indices were hammered. Energy down, realty down, metal down. Um, Consumption was relatively lesser impacted, if I can put it this way, pharma as well, and FMCG was obviously relatively least impacted, was only down some 2.79%. Again, I won't read too much into this. I mean, like I said, what we need to do as retail investors is just take a step back and really um, be opportunistic in this, in the sense, identify good businesses that we always wanted to have in our portfolios. And if we find that they are correcting more, they are in a value zone, then probably look to enter them strategically. So that was my just quick take on the market. I hope this helps in some way, but have a nice day and keep a long-term focus. Thank you.